Something big happened with HEX about a month ago related to Richard Heart or the origin address. Whoever owns it, whether it's a small group, a trust, or, everyone assumes it to be Richard Heart. The origin address is the address that owns 90%, well, maybe 85% of the total HEX supply. The origin address isn't just a single address. The origin address has been split up into tons of daughter addresses. And even though this scares people at first, most people that realize what's going on, and pretty much every HEX investor knows that this origin address is not a threat to the ecosystem like it would be in any other ecosystem. The VCs, the insiders of every other ecosystem, they dump their coins all the time. They're just permanent sell pressure. If your ecosystem did a fundraise with Series A, Series B, seed round, venture capital investors, you're screwed. Okay, you've got permanent unlocks like Solana all the time. Now, with HEX and PulseChain and PulseX, they did it a little differently. Whereas one big dormant player owns the vast majority of supply, and the only people that can really hurt the price are the investors themselves. It's provable on chain that Richard Heart, the origin address, for the sake of this video, I'm going to call it the OA, has never sold a coin, has never actually hurt the price. In fact, it's only ever bought more coins up, doing buybacks to increase the price right around this time last year that was actually happening. But what's been going on? Recently, the yield in HEX and the yield in INC token, the yields in PulseChain that everybody was using to keep rolling and continuously dumping, well, they've been slashed. The yields have been slashed everywhere. The INC inflation rate was dropped 90%. So yield farming on PulseChain is only 10% as profitable as it used to be. But this video is about HEX and what's happening with HEX. You see, people were doing these rolling short-term stakes, which, if you know how HEX works, you can never infinitely restake for the same yield percentage. If you keep trying to do this, eventually over time, you will make less and less yield. That's the way that the share system works in HEX. We don't need to talk about that right now. What we need to talk about is the actions of the origin address, because I never actually addressed this on a video, and it's interesting because it could foreshadow the actual plan, the grand plan, the strategy, the chess moves being played. And while sometimes I think people give Richard Heart too much god status, as if he's somehow this mastermind puppeteer that has infinite wisdom, power, and control, I don't buy into that. But what I do buy into is he's probably thinking a few steps ahead. He's a smart guy, and he's also able to change his mind and adapt to market conditions, which is what I theorize that he's doing here. Watch the whole video, hear me out on this theory. See, people were doing, like I said, these rolling short-term stakes. Let's say you had like $10,000. Well, every month, these short-term stakes were effectively paying out 1% APY. So every month, if you were staking a short-term $10,000 stake, you might get like $100. Now, it doesn't sound like that much for smaller guys, but for bigger guys with $1 million or $100 million in HEX, this was just sell pressure. And all this sell pressure during a bear market, when retail mania is not actually here yet, it's just nothing but harm, because the reality of the situation is that crypto is PvP right now. We've got an oversaturation of meme coins and the lack of new players coming into the game. PvP means player versus player. We're basically rotating all the money around at one giant poker table, and that's how it's been for the last year and a half, whether anybody wants to admit it or not. Pump.fun is a prime example of this. Okay, the only people in crypto are trading among themselves. Whereas new retail, maybe they're buying some ETFs, but they still haven't quite come in the same way that we've seen in previous cycles. Now, basically, when we saw the origin address make some mega 15-year stakes last month, they staked a whole bunch of HEX for 15 years. And by the way, when you stake HEX, you get penalized for unstaking it early. So you can't just unstake it after a couple days or even a couple years. You'll lose almost all of it. And the penalties go back to the people that were staked. If you're new to HEX, that's how it works. But what did these massive 15-year stakes do? Well, they cut the yield rate of HEX as well. So they didn't actually cut the inflation rate of HEX. But what they did is that they scooped up, they vacuumed up a big percentage of the yield, because the constant 3.69% inflation rate in HEX is divvied up to everybody that's staked proportionally. So now that you've got this mega giant entity that's staked for 15 years, it's scooping up a lot of that interest, it's scooping up a lot of that inflation proportional to everybody else. Basically, everybody else gets less. Now, the locking for 15 years showed me a couple of things. One, it was kind of a flex or a signal to show control. So if there was any FUD about, Interpol or the SEC or even some absurd accusations that Richard Hart was dead, which by the way, the products would still work with or without him. They've kind of been working without him for the past couple of years now. He hasn't been public, but he's clearly not dead. I mean, he did some recordings and he's on social media all the time. Obviously that's absurd, but this shows control. So for any fears that maybe the origin address doesn't have control of these coins, well, you just absolutely cannot say that anymore. Whether it's a trust in Switzerland or whatever it might be, somebody has control of these coins, and they wanted people to know. Now, that's only one tiny component of this. The real strategy here was that clearly there was a desire for the HEX yield to go down to stop the sell pressure from people permadumping at the all-time lows. And really, I think it's part of a great shakeout. People that were too comfortable with rolling stakes now have to reassess their situation, and some people, like we've seen, big whales, have actually capitulated. People have been capitulating, sometimes $1 to $2 million at a time, and exiting because their previous strategy of, I'm just going to stake this forever and earn, 1% a month forever, well, that harms all the new guys, right? And that doesn't work for them. And when that strategy doesn't work, they either have to figure out a new strategy or go elsewhere. Which is why I believe ultimately this is part of a massive shakeout in the ecosystem. Richard's shaking the tree, trying to get every whale or larger holder out that they can because it's less dead weight on the way up. You would rather somebody sells low than carries all that money to the all-time highs and then dumps up there. They're less powerful dumping at the bottom than they are dumping at the top. So locking up all that HEX for 15 years, that was one signal, again, of control and to lower the yields. But there's another thing that happened about a month later. More recently, the origin address also made this giant staking ladder. If you haven't heard me talk about a staking ladder, it's just multiple stakes, and it's visualized by this chart that you see on the screen right here. This chart, these two addresses, are the two origin address related, assumed to maybe be Richard Hart related, HEX wallets that have staked, as we can see, 11 stakes that expire in increments of yearly. Okay, so you've got the 17th of March, 2026 is the next one. Then you've got March 7th, 2027. Then you've got March 7th, 2028. And so on and so forth, all the way up till March 6th, 2035. So this mega staking ladder is interesting. Why would Richard Hart do this? Why would anybody do this? Think about it from the perspective of you're using all the levers available to manipulate the system to the ideal conditions for massive growth. And imagine that you're thinking long term. When you're a whale this big, you can't even possibly sell with this low liquidity this early on, even if you wanted to. But we know he doesn't like to sell anyway. And I know this might be hard to put yourself in the shoes of somebody with this much potential money, but think of it as the monetary policy of HEX being adjusted to fit market conditions and to provide long-term stability. If we know any one thing, we know that Richard wants his products to succeed. And he doesn't really have an interest in running off with all the money. What? Could he possibly extract maybe $10 million? The guy was a Bitcoin billionaire, a serial entrepreneur. He's not doing this for money. And if you don't get that by now, you watch my previous videos. This video is not about that. So what is the strategy? Well, people don't just do things for no reason. And my theory is that Richard dropped the yield deliberately and also dropped the liquidity deliberately by lowering that INC inflation rate. And we could see the inflation rate due to the INC farms going away caused people to pull out their yield farms and drop liquidity in the Pulse chain network. The total PulseX liquidity is now $80 million. That's an all-time low of liquidity. Now, when we had 2 to 3 times that liquidity in our previous all-time low, we also had 4 times less volume. We only had like $5 million daily volume. We've got more on-chain volume with less liquidity. It's very interesting to see this dynamic. It's kind of a divergence. Last time we bottomed on low volume. This time we're bottoming on high volume. So this signals capitulation. This is a literal depiction of what shaking the tree looks like. And this is the volume on PulseX, which is the DEX on Pulse chain, by the way. Now, of course, people are always going to complain. Okay, so in this situation with this ladder and with these massive origin address stakes, people are now complaining that the yield is not high enough. Oh, why would anyone want to stake HEX if the yield is so low now? We can look at HEX mining calculator. This is hexcalc.net. So let's say I wanted to stake, 100,000 HEX for 1 year. We can see that the yield is now absurdly low compared to what it used to be. A 1-year stake used to get you about 9 to 10% APY. And after all this, now it only gets you, look right here down in the corner, 1.6% APY. I mean, you can earn more than that with a high yield savings account in a bank, right? You can earn 4% yearly just putting your money in a bank. Now, crypto is obviously not the dollar. Crypto has the potential to pump harder than the dollar. All the dollar does is devalues itself. So realistically speaking, that 4% APY in a bank account, it's to make up for the fact that they're printing money out of thin air and they're destroying your purchasing power with the hidden tax of inflation. But you still look at this. You look at this number and you're like, okay, that is pretty low. That is not very attractive. I'm not very interested anymore, to be frank, in 1-year stakes. 1.6%, it's just the cherry on top for hopefully the potential price appreciation. That's where everybody really gets the gains. The yield is the cherry on top, because if you're earning yield with the price appreciation, it just adds on to itself. But let's see it for a 10-year stake. We'll add a 0 onto the number of days here. And we can see that 10-year stakes have an APY of about 4.7, but a total ROI, because it's compounding, right? 4.7% every year ultimately results in 47.1%. Now, this is attractive to me, okay? Basically, these long-term stakes are the only stakes that for me personally are attractive. It doesn't seem worth it to me right now to stake for 1 year or even 1.5 years when the potential for, a massive bull run is just around the corner. So now I've got much more liquid HEX than I used to, but I've also got much more longer term stakes when I do restake. My stakes are now longer. I'm talking like 3 years, 4 years and up. Because 1.6% for a year, I mean, monthly, that's like 0.3, 0.2%. Not a whole lot. So people are always going to be complaining about whatever it might be. Because when yield was higher, people complained about the dumpers. Now yield is low, and people complain that the yield's not high enough. But I believe the people that are complaining about yield not being high enough have either left or they understand what I'm telling you right now. They understand the intention behind this. They understand that these actions signify the intention for a massive shakeout. So, to be actually honest, I don't see a lot of people complaining about the yield not being high anymore. Which is good, because apparently the market is okay with this. I saw a lot of people complaining that yield was too high earlier, because the HEX price was just destroyed. And in large part because it went up so much, so many people were in profit that they just kept dumping the price down. And to add insult to injury, the rolling stakes put this kind of permanent suppression on the price. And with no new money, no new demand coming in, that's net negative, right? So I think that was a good move. Again, I don't see as many people complaining that the yield's not high enough. If you're a whale and this yield's not high enough for you, maybe take your money to Ethereum, put it in some ETH LPs over there, do whatever you want. We've already seen those people leave, which is good. But what do we make of this staking ladder? Let's get back to the ladder here. All right, this ladder, when these stakes come due, the origin address owner is going to have to decide whether or not they restake it, thus not really doing anything to the interest rates, kind of keeping them as they are, or if they just let it end, what this could be is future hype events, future reward boosting events. Let me explain that with a chart, okay? Here we could see the daily payout per T-share in HEX. As we could see, it was about 8 HEX per T-share per day. And with the origin address mega stakes, we had that drop all the way down to 1.7. 1.7 over 8. That's about an 80, maybe a 79% drop in the yield. But this could go ratchet back up again, little by little, and we might get tiny little boosts in rewards. So when these stakes come due, if they don't get restaked, then you could call these days potential reward boost days. Potential days for hype, potential days for marketing stunts, and something to look forward, almost like an inverse happening. In Bitcoin, there's happenings, which are supply shocks because people don't get as much, the miners don't get as much. Here, it's the opposite of that. You, as a HEX miner, assuming that the OA just lets these come due and doesn't do anything, well, you'd get a reward boost. You'd get yield boosting. So this could be a yearly day to celebrate in HEX, but we're going to have to watch closely because we don't really know until the first one happens. We won't have any behavior pattern until then. Although I'm pretty sure that the origin address is not going to sell it. But whether or not they restake it or just let it go, I'm hoping they let it go to boost the rewards. Let's say it goes from 1.7 hex per day to 2 hex per day. That's a 20-30% increase in your yield on all your hex stakes. And again, just to be clear, I don't think, assuming Richard's the owner of all this hex or has access to it, I don't think he's interested in selling anytime soon. I truly believe he's playing the long game. And if he ever sells at all, it would be, 5, 10, 15 years in the future after HEX becomes a legitimate, globally recognized financial vehicle with enough liquidity for that to all make sense. We're still in the early days. He's still got the Interpol thing. The SEC thing is clearing up, but he's still got to get rid of a lot of this baggage. And there's a long way to go before HEX becomes a globally recognized financial vehicle. Until then, I don't see Richard dumping or cheating or destroying and nuking his own project anytime soon. It's been 5 years. Okay, HEX has been out for 5 years. If he was going to nuke and cheat, he would have done so by now. Who on earth plays a 5-year long con with this much strategy and buys their own coins? Like, that narrative is just absolutely false. But on the other hand, this is a response to Richard probably realizing that, for one, the sacrifice phase raised probably too much money, too much weak-handed money. So if you've got all these weak hands that bought on the hype because they were buying in the euphoria of the last cycle, you need to get them out if they don't truly believe. Now, we've seen a lot of people leave. The only people here are the hardcore survivors, the hardcore believers. And I've also noticed that nobody really seems to care about HEX right now. I mean, even myself. But because I noticed my own lack of enthusiasm about HEX, I assume that the rest of the market is feeling this way too. A lot of people say that they like HEX. A lot of people probably have staking ladders. I do. But right now, at this point in the market, I'm not personally super enthusiastic about it. Meaning, a lot of people probably feel the same way. I don't talk about HEX as much as I used to. There's a lot of other projects that I'm very interested in. And I see other people barely talking about HEX anymore. However, I still believe in my long-term staking ladder. I still believe in the long-term potential. And you've got the core group of stakers of last resort in HEX that feel the same way. So because they're not talking about it, but there are so many people committed on chain by showing with their actions that they believe in HEX, this is kind of a good sign. It means when the last bull, when their spirit has been crushed, then we can finally go back up. My spirit is crushed. Maybe we can go back up now. But I'm a perma bull deep down. In my soul, in my brain, but logically, I understand that this has long-term potential. But, with my heart, thinking with my heart, no pun intended, my spirit is crushed. Same with many others. HEX is not super exciting and sexy to talk about right now. But going back to the strategy, I do think maybe it's likely that Richard is making these stakes as future, big payout or yield boosting events. And it'll be interesting to see what other potential moves that he or she or the Nigerian prince, whatever, decides to make. For example, one theory I saw online was how crazy it would be, how much hype would occur if the origin address or the sacrifice wallet simply just bridged in some ETH. The sacrifice wallet right now holds 170,000 ETH, valued at something like $300 to $400 million. So what if, for example, the sacrifice address just bridged in $50 million worth of ETH, didn't buy anything with it, just to show, just to flex, just to say, hey, look what I could do at any time. A simple bridging in of that much economic value would get the masses excited after a shakeout. So think from the whale's point of view. Think of that. If this was your project, how would you hype up your own coin, but how would you also shake out all these weak hands that clearly have to go? And a question to the audience: are we finally at the reversal point? Have we shaken out enough hands now? Or are there more to shake out? We've experienced a lot of pain. It's been very, very hard the past 2 years, not only in HEX and Pulse Chain, but all of crypto. I know guys in Solana that are just losing their minds. The game that people thought they were playing doesn't work anymore when no new demand is coming in. In the macro, we've got fears, but I believe these are short-term fears. Tariffs, whatever it might be, inflation. It's all just getting set up deliberately for the long-term game. The people really pulling the strings In Pulse Chain and HEX, it's the origin address. Globally, it's Jerome Powell, the Federal Reserve, moving the funds rate down. They're about to start moving the funds rate down. Think about all these players playing the long game and setting us up for short-term pain so that we can have long-term gain for those that delay gratification. Again, just to wrap up, I see these potential stakes in the future as yield booster events, potential, hype cycles. It's nice to have. Because imagine just the hype and the marketing value for, hey, on March 7th, March 17th, this is going to be the day that your yield, your HEX rewards go up 20% or 30%. So they're low now so that they can ratchet up higher later. Understand? Also, the fact that T-shares are always getting more scarce means that this number is always slowly ratcheting up anyway. Look how it was 6.5 over here, and now it's 8 over here. So this number naturally grows anyway, but it will ratchet up significantly on these particular dates that you see right here. So what do you think? What other grand plan, puppet master type of stuff could Richard do? What should he do? Everybody thinks they know what to do. But if you do have something, tweet about it, drop it in the comments. If you have an idea, and it's an actually well thought out idea from a whale's perspective, not from the perspective of a pleb, because that's short-term thinking, right? But for the long-term success of HEX, what chess moves could be made at this point? And have we finally reached ultimate capitulation? It feels that way to me mentally. I feel the pain. I'm sure a lot of other people do. So maybe that means it's finally time for number go up. We'll see. Make sure you like, subscribe, share, leave a comment. See you on the next one.